Netflix adds more than 10 million subscribers. You must have heard that Netflix released its earnings outcomes after the market closed yesterday, July the 16th, 2020. And on Market Watch, they covered a bit of it, and they began by saying that they logged another blockbuster quarter with addition of 10.1 million new paid subscribers and a significant jump in revenue, and rewarded one of its most important executives with a promotion. But shares declined in after hours trading on fears of slowing second half growth. The company reported 10.1 million new subscribers in the second quarter, topping the 10 million mark for a second consecutive quarter amid shelter-in-place orders related to the COVID-19 pandemic. The company reported net earnings of $720 million or $1.59 a share, compared with net income of $270.7 million or 60 cents a share in the year ago quarter. And then revenue improved to 6.15 billion from 4.92 billion a year ago. Analysts surveyed by FactSet had expected adjusted earnings of $1.82 a share on sales of $6.08 million. They also expected the addition of 8.21 million paid subscribers, higher than Netflix forecast of 7.5 million in April. Netflix shares have soared 64% this year, while the broader S&P 500 index has declined 0.5 in 2020. Netflix second quarter results sent shares of the video streaming giant down more than 8% in after hours trading on Thursday, 16th of July 2020, following a 4-month surge that propelled its stock to 4.39 at the close yesterday, July the 16th, 2020, and a market valuation of $230 billion to record highs. In a letter to shareholders, Netflix executives admitted that the gains in the first half of the year were likely pulled forward from later in the year, which means fewer new subscribers in the rest of 2020. In Q1 and Q2, we saw significant pull forward of our underlying adoption, leading to huge growth in the first half of this year, which is 26 million paid net adds versus prior year of 12 million. Executives said in the letter. As a result, we expect less growth for second half of 2020 compared to the prior year. Investors are selling off in anticipation of a turbulent year ahead, beginning with a tepid third quarter forecast. Netflix offered revenue guidance of $6.3 billion, below FactSet analyst estimates of $6.4 billion, and earnings per share of $2.09 versus analyst estimates of $2. The company expects 2.5 million net subscriber additions in Q3. Analysts predict 5.4 million. We will include this link for you to read up the rest of it. So we come here and we are going to just cover a few fundamental data concerning Netflix. Part of also what we covered here, some of these are what you're going to consider also in a much medium to long term data if you're doing your analysis. So, but some of the other ones which we're going to cover right now will be very much short term. But you need everything: the short and the long term data to create a very good picture. And so we begin here with a short ratio, put call ratio for yesterday. You can see that we have about half of the put interests is that of the number of put interests is half of that of call interests, and for 30 days it's this number that is it's a figure that is slightly below that of yesterday. So it's also an indication that of late probably more caution or more bearish traders have joined the option side of Netflix of Netflix. Yes. So we have a market cap of $231.9 billion. So we have these are now up to date, as you can see, 16th of July 2020, and earnings per share is $5.64. Price earnings ratio is at 343. Forward price earnings ratio is 60.55. Price to earnings slash growth is 2.63, and they have a short interest of 2.5%. Meaning that the amount of money involved in amount of money borrowed on Netflix that has to be paid back, that will be paid back regardless of anything, is as the case may be. At some point it will be paid back. So that will be probably $4.6 billion or 4.6. That will be more than $4.6 million. It will be, I would say, about $5 million, $5 billion, or thereabout, close to that, or if not more. I think that will be about 6 billion. About 6 billion. Yeah. Yeah, about $6 billion. So these are a couple of news items concerning Netflix. Okay, some of them are quite important. So Wedbush maintains Netflix underperform rating, $220 price target, citing high subscriber churn potential. And US stocks futures rise as recovery hopes offset virus fears. Analyst Rosenblatt lowers Netflix price target to $400 from $445, maintains neutral rating. Credit Suisse lowers Netflix to neutral from outperform, price target to $525 from $550. And then you can see some of these ones. This is how it performed in 1 month and for 6 months and for 1 year. And then this the other broader indicators, broader sector indicators, and this is more of US Communication Services, S&P Global Communication Services. This is the S&P 500 indicator index, the broadest market indicator in the US, and then S&P Global BMI. So these are the ETFs that are holding at Netflix. So this PBS is issued by this PBS is issued by Invesco. You can see there says Invesco Dynamic Media ETF. And then this takes us back to the charts. So as you can see here, Netflix definitely pulled back. It has pulled back. So that peak over there is a peak. This is a peak for the last 6 months. For this whole year, we don't have. This is not a whole picture of everything, but so far this is a peak for the year. It may be the peak of its highest peak ever. So that was on the 10th of July. So that was about 1 week ago. So it has pulled back since that time, and its time series forecast is even way ahead of it. It's at that time series forecast is, as you can see, there is 543.20, and it's the price. This price is that's the price of Netflix is 527.39. So it is just if validation that it has pulled back. If you're in doubt, and then this is a trend line that is the 20-day simple moving average, and this is the 50-day simple moving average. This is a 200-day simple moving average. So regardless of, since this is a bullish, or rather the traders involved in Netflix are very much bullish, we would expect it to be more than to be trading above its 20-day simple moving average. And so the last time we had this sort of support was on the 26th of June. That's almost getting to a month now since that time. It probably tested its 10-day simple moving average. We don't have that, but there's a good chance that that 10-day moving average might be above this or just right about there. So it probably saw some support there sometime in June. And then going down here, we can see that the momentum, the signal, the MACD hasn't really crossed over the signal line of late, meaning that there's a good chance that all the negativity were banished, and it has continued to remain the bullish tendency, the bullish indications have remained unabated, as we haven't seen any more crossover, especially a negative tending crossover. And then on the RSI, it's just right at the border of being overbought. Yeah. So as things stand now, this is our coverage so far of Netflix. Probably the first we are covering it in a long time, I think. Okay, thank you very much for watching this video. Don't fail to subscribe to our channel and sign up on our platform. On our platform, we will help you make very smart use of your money. When you sign up there, you follow the forms we have there, and you let us know who is benefiting from your transactions like your rent payments, your mortgage payments, and money transfer, and indeed any other thing. And then we will go and negotiate with them to invest that money you have been paying or you paid in the equity we will give you when you sign up. You can't get it better anywhere, and that is a very, very smart use of your money if you succeed in getting that done. But sign up anyway, and you have some equity in your account with us, and we'll continue to go on there. Okay, and support us on Patreon or through PayPal. Thank you very much again, and subscribe, sign up on our platform, support us.